that we're going to be going over what makes a trend line. Identifying a trend, this is really important, even if you're not using technical analysis. If you're a fundamental investor, you need to know if the overall trend of the stock that you're looking at is going up or down, as that's greatly going to depend on whether or not you make profit. There's two schools of thought. Some people use the upper wicks of the candlesticks or the lower wicks, and some people use the real bodies. Personally, I use the real bodies, and neither is right or wrong. It's important that you remain consistent, and inconsistency obviously will give you some wrong signals. So we'll look at some examples of the two schools of thought as well as inconsistent trend lines. And then last and most important, what do trend lines tell us? How can we utilize this information to make more profitable trades and investments? They're going to tell us potential reversals, breakouts, and then all these patterns, flags, pennants, channels, triangles, they are all dependent on being able to draw accurate trend lines, and then being able to see clear patterns breaking out or forming are going to give us one step up on the herd, so to speak, which are not utilizing technical analysis and seeing all of this price action visually in front of us. So what makes a trend line? The prevailing direction of a trend is composed of either higher lows on an uptrend or lower highs on a downtrend. Seems like a pretty fundamental basic concept. We'll look at some examples of that. But in terms of the trend line, you obviously need at least 2 points to be able to draw a trend line, but that's not enough in terms of having a valid trend line. 3 touches is the bare minimum needed for it to be valid. Doesn't mean you can't draw a trend line with only 2 touches, but that just means you don't put too much weight into it being an accurate trend line until you get that 3rd touch. And the more touches you get, the more valid the trend line is, and the more confident you can be. If you have a trend line that has played out over the past 2 years and it's touched that trend line 15 times, you know that the odds are more likely than not that the next time it comes down to that trend line, it will likely hold it again, just like it has done many times in the past. So let's get into some examples. This is a very visually dependent topic, so we're going to go over all kinds of examples of everything we just talked about. So this is gold on the hourly time frame, and we're going to be looking at what constitutes a downtrend, and it's the lower lows. Lower highs and lower lows. So there doesn't always have to be lower lows, and we'll look at a couple examples. A descending triangle pattern has a horizontal base and then lower highs as the price gets tighter and tighter. So we'll look at those examples, but lower highs and lower lows is the basic fundamental of what a downtrend is. And just think of stairs. If you're going upstairs, higher lows, higher highs, and downstairs is the opposite, lower highs and lower lows. So drawing a trend line, this is me using real bodies. So I'm picking a point to start that trend line at, and picking your point really becomes with practice, because if I were to start this trend line up back here, it would not be a good trend line because I would only be able to hit 1 point. So let's do some examples here. If I were to draw the trend line from, let's say, the highest price that was hit here, I would use that real body of the candlestick and I would get that one trend line. And when I'm drawing trend lines with the real body of the candlestick, I'm ensuring that no candlestick is closing above my downtrend line. So you can see this candlestick is poking out above it, but the close of that red candlestick is all the way down here. I'm making sure that the green candlestick closed right at my resistance line and then the price rejected. So I wouldn't want to draw my trend line here just because it hits twice and then the price action is all the way down there. I want to be where the action is at. So I would choose this as my starting point, that top on that bounce attempt, and then I would make sure to hit as many points as I can on the way down. But again, I'm just getting tighter and tighter and making sure that no price closes above my downtrend line. So if I were to pull it in and hit this point right here and make my focus right there, then I'm seeing that this breakout occurs, and this would make it an invalid trend line because obviously the price is not responding to it. So I want to give a little bit more wiggle room, and again, make sure that no hourly candlesticks are closing above my downtrend line. I'm closing right on it, right below it, and then there's that rejection. So I've got 1, 2, 3, 4 touches, and then it ended up touching a 5th time down here, and actually a 6th time right there before that clear break above it, and that is telling us that the bulls are showing up. So every time we rejected, another lower low followed through with it. Now that we have broken this downtrend line, that could be a bullish entry signal because we are seeing that the price is no longer rejecting from that level. Now, personally, not only is the break of a trend line important, I use trend lines as sort of a heads up. It's not all out in the bag for the bulls once that level breaks, because I'm I'm all about price action. Price action is king in my opinion. So I'll be looking at these lower highs that are set, and these are forming resistance. Every time we make a bounce attempt and reject, that's a new resistance level to be watching. So we made a bounce and we rejected from 1202. We made another bounce, rejected from 1191, and then another bounce, the last one here before the breakout, rejected at 1186. So now that the bulls have gotten in control, that alone, breaking that trend line, could be a buy signal for the more risky traders. If someone wanted to be a bit more cautious, they would wait for the lower high pattern to break as well. So again, this top was at 1191. So once the price breaks 1191, we break the lower high pattern. So not only is the trend line important, but so is the previous price action. And because that's where we're going to be looking for resistance now that we're on our way back up again. So we can even draw an uptrend line here. When I'm drawing an uptrend line, I'm hitting the bottom of any red candlestick. I'm making sure no hourly candlestick closes below my uptrend line. So even though this green candlestick is dipping well below that trend line, that's the open of the candlestick, that's the close of the candlestick. Every single close here is above my trend line support. So where do we find resistance? We look back at the downtrend. Every bounce attempt rejected and formed a new resistance level. So I'm seeing a resistance level up here at 1202, and we are currently at 1194. So that is one of the next levels that I would be looking at. There was another little bounce attempt right here that rejected from the downtrend line. That level is 1198, so that's going to come first. So that's a clear downtrend line. Let's look at Tesla on the daily time frame. Very strong uptrend. So again, making sure no candlestick is closing below. We have plenty of lower wicks dipping below, but as long as the price continues to close above that level, it acts as support. So here we are. Visually, I zoom out and say, where do I want to start my trend? I want to start the uptrend line. Once we have our clear lowest price, and we had a little higher low here. So we can see once that steep trend started, right down at the base is where I choose that first candlestick to go off of, and then we touch that level, or we touch this trend line 1, 2, 3, 4, more times than you can count here. Well, I would hope you can count that high, but let's call it a dozen plus times, so we know that's a very valid trend line, and it keeps hitting it and bouncing. We're consolidating now where we currently stand, and we have this trend line support to be watching, and we can utilize this information because if we lose this uptrend line, that's a potential signal to reverse and look in the opposite direction. So like I said earlier in the outline, losing an uptrend line or breaking a downtrend line is a signal of a potential reversal and can have us looking in the other direction.